And it's that time again where we do business for 55 minutes here on Business Incorporated. Here's what we have prepared for you today. It's starting in Nigeria. AfCFTA preferential trading begins today and it's being launched as we speak. And in Egypt, inflation is falling. It's down 26.6% for the month of June. Zimbabwe is easing the policy that will allow them import old cars older than 10 years. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. We start from the oil space where prices slipped on Tuesday on worries about a slowing Chinese economy crippling demand. There were growing consensus that the U.S. Fed Reserve will begin cutting its key interest rate as soon as September limited declines. Brent crude futures fell 21 cents, that's about 0.25% to $84.04 a barrel, while WTI of the United States also dropped 25 cents, that's about 0.31% to $81.66 a barrel. The world's second largest consumer, the economy, that's China, grew by 4.7% in April to June, according to official data. It's the slowest since the first quarter of 2023 and missing a 5.1% forecast in a poll. It's also slowed from the previous quarter's 5.3 expansion. And this is protracted because of protracted property downturn and job insecurity. In the United States, another major driver, Fed Chair Jerome Powell, has said that the 3 U.S. inflation readings over the second quarter of this year add somewhat to confidence that the pace of price increases is returning to the central bank's target in a sustainable fashion, remarks that market participants interpreted as indicating a turn to interest rate cuts may not be far off. Low interest rates, we know, decrease in cost of borrowing and can boost economic activity as well as oil demand. Gold prices rose on Tuesday as comments from that Mr. Jerome Powell bolstered the case for a September rate cut, while investors await more U.S. economic data for further monetary policy cues. Spot gold gained 0.7% to $2,440.01 per ounce. The bullion hovers only slightly below the record high of $2,449.89 that it hit in May. Powell has said that the 3 U.S. inflation readings over the second quarter of this year add some kind of confidence that the pace of price increases is returning to the target of the Fed and will bring sustainable decline. Investors are still waiting U.S. retail sales data, which is due later on today for further direction. Gold hit multiple new highs in April and May, then retreats in June when U.S. interest rate cuts forecasts were pushed out and physical demand started to soften in response to the high prices. In July, greater optimism for a September rate cut has driven the non-yielding bullion higher again. Nigeria's June inflation number is still hanging in the air, and with food inflation nearing 41%, the federal government, we've seen, have ramped up effort to boost food supply through it. On the one hand, 150-day import-free policy, and then yesterday we had that announcement about distribution of trucks of rice to different states. Mr. Bismarck Rani was the chief executive officer of FDC, was our guest on Business Morning earlier today, and he said these are only short-term efforts that will still require more efforts.
We can spend the entire morning talking about the problems, and they are well documented. What we are talking about is short-term solutions, medium-term solution, and long-term solution. What we are trying to do, or what I think I hear the policymakers saying, is that let us import stuff now and then get it to the people. But the fact that you are importing commodities, the fact that you have trucks leaving the warehouses, if they are leaving with anything, does not mean it gets to the vulnerable. The big problem is, who are the vulnerable? Who is identifying them? Is it going to be scandal-free? Is it going to be judiciously executed in such a way that the impact is felt. As we speak today, those things, there's the institutional infrastructure to ensure that those bags and those trucks of fertilizers, trucks of rice will get to the people in those states. I'm not sure that is going to happen, because I can almost assure you that those trucks, when they get to, say, my estate in Delta State, I'm not sure how it gets down to the people in the streets or in the markets of Warri, Sapele, Ughelli, Asaba, and others. So announcements are good, promises are good, but the truth is that until you feel the impact on the marketplace, it will just be another, what I call, like pie in the sky.
Well, another buy in the sky. That's what Mr. Bismarck Rwanda says. We do hope, of course, for longer-term plans. Now, the Nigeria Exchange Group says it has made participation in the ongoing recapitalization of banks easy for investors. This is after the launch of a digital platform which reduces the requirement and transaction time for participating in the primary auctions. The group CEO of the NGX Group was a guest on Business Morning earlier today.
You look at the secondary markets part of our business, it's very, very efficient. It's highly digitized. What we're just trying to do here is to, within the ambits of the regulation that governs us by the SEC, see how much more support we can offer to our ecosystem. I mean, we do have in that primary market space many digital, sort of intermediaries. As a matter of fact, if you go back in 2021, there was an end-to-end digital sort of, capital raising activity then. What we have done now, is to scale that effort. So in this situation now, you would have many of the banks who, for example, are connected to this gateway, which means that for many banks today, if you go at the end of your mobile device, you're trying to transact, you're trying to transfer money normally, you would find an opportunity also to participate and to acquire their shares or their rights. And that is because of APIs that the banks also have consumed. So you can think of this now as scaling that up, giving a lot more multiple access and gateways into the central platform, of which this NGX Invest website we mentioned just now is just another gateway.
Yeah, so that might attract you, to look into some of those banks, and since it's been made easier. Now, today is a special day because it is the launch of the preferential trade under the AfCFTA Guided Trade Initiative, GTI. The launch, which is being coordinated by the Nigeria AfCFTA Coordination Office on behalf of the government of the Federal Republic of Nigeria, as well as the AfCFTA Secretariat, is in line with the vision of Africa's founding fathers to unite the continent in one shared prosperity and renewed hope agenda of the present administration. The national coordinator, Mr. Segun Awolowo, Nigeria AfCFTA, his office is hosting this launch in Apapa Port in Lagos. Mr. Awolowo notes that the key objectives are to demonstrate and showcase Nigeria's trading under the AfCFTA, and that businesses in Africa can take advantage of the GTI to trade, as well as the processes through which the AfCFTA can be effectively engaged. The Minister of Trade, Ms. Doris Anete, who is there at that event, even as we speak, identifies this as a watershed moment for Nigeria. And she says she's thrilled to witness the birth, congratulates the first companies that will trade under this initiative, and they include Dangote, Catstell Solutions, the General, Flour Mills, and a whole lot of them. Well, we're staying on that now. We know that Nigeria signed the AfCFTA agreement in July 2019, becoming the 34th Africa state to be a party to that, with a robust economy across different industries. Now, we've seen other countries participate in this. We've been talking about Nigeria's readiness and preparedness for this. Well, let's discuss this with Dr. Bamidele Ayemibo. He's the Chief Executive Officer and Lead Consultant of Free Tea Impex Trade Academy. Dr. Ayemibo, good afternoon. Should I say congratulations?
Yes, congratulations indeed. Good afternoon. How are you?
Yeah, great. So, I mean, First, tell us, why is this called Preferential AfCFTA? We know that some other countries have already tapped into this platform and are already trading, some African countries. I think Ghana is even in that list. But why is this now launched today and called Preferential AfCFTA?
All right. So because the agreement has been signed for many years now, the AfCFTA Secretariat in Ghana had to start an initiative. They call it Guided Trade Initiative. And the idea is to see how do we begin to trade on the AfCFTA in such a manner that we can begin to identify the bottleneck and the issues with the protocol vis-a-vis the law and regulation of different countries, so as to be able to begin to fix it in such a manner that when we have a lot of other business coming on board, we don't have hiccups in the process. This started for over a year now. The first trade was done between Kenya and Ghana. I think it was extra advice that was shipped, and a number of other countries have come on board, and we've been waiting eagerly, looking for when Nigeria is going to do its own. And now we are doing it's preferential because, of course, it's a free trade agreement with preferential treatment for different products. Not all products will be traded under the AfCFTA, of course, obviously, but at least 90% of goods based on the agreement are going to be fully liberalized. But we still have others that are partially liberalized, and those that will not even be allowed at all will still retain their tariff based on the agreement. But all these are allowed for countries and regional section in Africa, like West Africa, in Africa, for example, to determine what will be allowed and what will not be allowed.
So tell us what will be allowed, what will not be allowed, the tariffs. Tell us what makes this different. Those tariffs you talked about, what is out of the window and what is in trading on this preferential platform?
Okay, so we currently have the common external tariff in West Africa that allow trade to be done in West Africa, either ECOWAS, and that's what has been adopted within the ECOWAS region to be allowed for trading. So what this means is that we have 90%. Now, if for individuals that want to check what is allowed for each country, AfCFTA already have a website for that, that you can Google it, to be able to get the information that if I'm shipping to Kenya, for example, I can easily identify what will be allowed duty-free into Kenya and what will not be allowed duty-free into Kenya. That way I know if my product is eligible for free trade agreement within Kenya or not.
So we see fresh set of companies there, and it's the big guys. Do the small companies have any share in this?
You know, that's the challenge, actually. You know, we talk a lot about SME, the SME, the engine room of the economy. But most of the time when we want to do things like this, I would have loved us to showcase small businesses that are able to also meet this criteria. I'm hoping they will, because one of the challenges is that the challenge of export readiness for a number of SME in Nigeria. So I understand the reason why the government will go for the big guys, because they know, okay, these businesses are pretty much ready. In fact, some of them are already shipping to these locations, only that they were not shipping under the free trade agreement. But now those shipments will now be done under the free trade agreement to enable to enjoy duty-free in all these locations.
So, you know, the payment system has been a hurdle for a while. And I know there was the introduction of PAPS. How's that going? How active and helpful will that be, you know, after this launch?
Yeah, PAPS is the Pan-African Payment and Settlement System. And the objective is, I mean, it was discovered that $5 billion is being paid in fees by different banks in Africa for remittances abroad. And in the bid to stop that and to prevent sabotage, of course, because now the money have to go through New York or go through UK or go through different countries if we have to be using their currency for settlement. That's what led to the initiative, championed by AfCFTA, of course, in partnership with the AfCFTA Secretariat, to launch the Pan-African Payment and Settlement System. Now, that enables me to ship to South Africa. I can ship to South Africa. South African buyer will pay in rand, and I will get Naira in Nigeria. That is on already. A number of Nigerian banks have keyed into it. A number of African countries have started. So that's on, but not all African countries are on board already. But the idea is to ensure that it doesn't stop me from still doing dollar, euro, or pounds transaction under the AfCFTA, but it allows me to have an option to be able to pay someone else outside of Nigeria, in other parts of Africa, to be able to pay in my local currency. Now, what this means is that if I'm an importer, I'm currently having challenge with forex, and the item I need, maybe my raw materials as a manufacturer, I can source it efficiently in some part of Africa. What that means is that I might not be able to pay in naira, rather than going to source for forex to be able to pay. And that means a number of businesses that will be able to source their raw material in Africa might need to rework their supply chain in such a manner to be able to source in Africa and be able to avoid the pressure they are having right now to be able to source dollar for the payment. So it's not just me exporting, being able to get naira payment. It also helps the importer. I think PAF is even a lot good for importers in Nigeria to be able to pay in naira rather than paying in FX.
So, Mr. Ayemi, but I do know that you are very active in especially the non-oil trading space. So, because sometimes these things are so beautiful to hear. We've been talking about PAPs for how many years now? But in reality, do you really see businesses, especially at least even not the small, the medium-scale businesses, tapping into this platform and being able to actually trade on the continent?
Very important question. Very, very important question you asked there. Do you know that ETLS in ECOWAS has been on for over 30 years? And quite frankly, there are businesses in Nigeria that are not even aware of ETLS. One major challenge, not just in Nigeria, even in Europe, in Asia, that is hindering the full utilization of free trade agreement in different parts of the world is awareness, publicity about the agreement. Number one. Number two is information about how do I benefit from it? How do I benefit from it? How do I obtain the certificate of origin that enable me to be able to get this access to free trade in countries I'm trading with? Now, this information are not readily available. Now, if we are going to be able to get the SME to partake in this, then from the Federal Ministry of Trade to Nigerian Promotion Council to National Action Committee on AfCFTA, they must take it very seriously. You know the way they publicize when there is presidential election, government election, that you will know all the frontline candidates because of the publicity. That is the kind of publicity we need to give to AfCFTA, because it's only when business are aware that they will now begin to search for information on how to utilize it. Else, we might be going again the same way ETLS has done. I hope that will not be the case, because then that will be very, very bad for Nigeria, because a lot of African countries are already tapping into this.
Well, I do hope so, Dr. Ayemi. And well, I guess we can also as the media, take part of that responsibility to say we'll keep this on the front burner. But, sometimes the challenge is you call the people, for instance, the Minister of Trade is there, Mr. Shegun Wolowo, obviously the coordinator. How many times have you seen him on, media, especially television, to publicize some of these things? But we'll stay on it. But thank you so much. And we say congratulations again, for this launch. Hopefully, we will see the fruit of it. Dr. Bamidele Ayemibo, the CEO and lead consultant of 3T Impex Trade.
Thank you very much for having me, and bye-bye.
Bye. still watching Business Incorporated right here on Channels Television. We head to the markets space, and I was saying in the morning, Will, I do hope you come with green numbers.
Yes,
and by now we should have gone above 100.
Well, it's would I say in your dreams?
Oh man,
because
that was harsh.
that was harsh.
That was harsh.
Yesterday's positive performance apparently
attracted a lot.
Short-lived.
Attracted a lot of profit taking.
Yes, this morning.
But it's too soon, Will. I don't know. Talk to your investors. I mean, we had 4 straight negative trades last week. We just recovered on Friday, built a bit on it on Monday, and by intraday Tuesday, we are back to profit taking. Give us
That's
a
the market
break.
cycle. It's just, the ups and downs. The volatility in the market is what is speaking right now, especially, penny stocks are really going up. We see the life stocks. You see it, insurance stocks going up. And investors are repositioning, positioning, and repositioning. So you're seeing that sell-off, that profit taking here and there, so they can meet up with earnings.
Yeah, and I see the creation of that livestock development ministry.
Yes,
created, I think, another round or group of investors.
Of course, right now, eyes on livestock feed right now. Everybody is just looking to buy in and cash in when the time is right.
Yeah, well, wait until we get into poultry business now.
Of course. So we'll kick off as always. Let's check in on see how major equities in Africa are doing at intraday. On the second day of trading day of the week, we see sentiments at intraday were negative on the African continent. We see Nigeria's NGX was down 0.05% at intraday, still hanging on to the 99,000, but hopefully we cross 100 at the close of business. I'm hoping for a miracle. And this was led by losses in the oil and gas sector. We see O&O and Eterna really dropping at intraday. Now, South Africa at intraday was down nearly 1%, 0.96%. And now let's look at Egypt. EGX 30 was not doing well. It was not doing well at intraday, 0.11%, and down to 27,921 points. Meanwhile, Kenya's Kenya's exchange, closed Monday's session in the green, 0.09%. But away from equities now, let's look at Nigeria's fixed income space and keeping an eye on inflation data that was out yesterday, and headline inflation printing at 34.19%, which feeds to the cost of borrowing. Let's talk to Chuka Nwachukwu, is the group head, Assets and Liability Management, UBA. Good afternoon, Chuka. Chuka, Nigeria's inflation has surged now to 34.19%, and recent bond auctions have shown a decline in government bond offers. Now, given this persistent rise that we are seeing in headline inflation, how will this affect the government's borrowing strategy?
Thank you, Will. Like you rightly mentioned, the inflation results came out yesterday, and we saw about 24 basis points movement from 33.95 to 34.19, pardon me. So basically what this means is that investors will demand for higher yield in the fixed income market, even though the government has practically met his threshold in terms of borrowing, but we expect that this will affect government's repayment plan, especially with high yield. And so government will definitely we look for other means of meeting up some of the borrowing from the budget, being that the yield, the increment in yield which investors will demand for, will mean that government will borrow more, and will mean that government will pay more than what they are supposed to pay. And so this will affect government borrowing towards the end of the third quarter, and then probably end of the year.
Okay, speaking of high interest rates, that's high repayment for loans. Last week, the central bank governor, that's Mr. Yemi Cardoso, assured that high interest rates would soon decrease based on the 6 consecutive months of decline in month-on-month inflation. However, we've seen that there's now a rise in month-on-month inflation for the first time since February. Given this development, is a hold or a rate cut still possible? What are your expectations for interest rates as the central bank's MPC meets next week?
While the central bank governor has indicated that we are approaching the end of the high interest rate period, the month-on-month inflation rate has declined slightly. You know, if you watch the inflation figures, you see that the disparity between what it was, towards the end of last year has reduced significantly. And what that means is that the hiking rate, is giving a positive impact. As the inflation rate has slowed down significantly, accordingly, we believe that MPC will either maintain or probably just move it up by say about 50 basis points, because we have seen that the impact it's in the economy is beginning to yield result. No minding what the result is as this last time, but then if you drill down to the core aspect of the core figures, you discover that is the agricultural sector as well as the petroleum sector that is causing the much higher higher rate, higher increment in inflation. And I believe that with the president pronouncement of 2 trillion pumping into the agri sector, we begin to see reduction in food price.
Well, we'll wait for that. What's the current market liquidity? How is it affecting the types of instruments investors are buying at intraday?
As they say, cash is king. System liquidity has been very tight. Today, system liquidity opened in deficit of about 850 billion. That is quite huge, and that has affected trading on the fixed income market, especially when traders need liquidity in order to settle some of the obligations, and so it will affect. It has affected trading in a sense that most traders are demanding for higher yield, and then of course most traders are also selling off even at a loss in order to meet liquidity obligations. So what we've seen so far is that traders are playing on the shorter end of the curve, especially on the T-bill side, 90 days, 182 days bills, a maximum 1 year. And we haven't seen a lot of major activity on the bond side, which of course is the higher instrument, and then of course higher duration securities. So just to play safe, traders are playing on the shorter end of the curve.
Thank you so much, Chuka Nwachukwu. Very interesting analysis there. Chuka Nwachukwu is the Group Head, Asset and Liability Management, UBA. Thank you for coming on Business Incorporated.
Thank you.
Now let's move on to other markets now. Major equities in the Gulf were mostly positive at intraday, boosted by bets that the central bank in the US is going to cut rates twice. But we see Abu Dhabi leading that with 0.06% uptick at intraday. Dubai also up at intraday, 0.04%. Now Abu Dhabi's index was led by a 0.3% increase in the country's biggest lender, First Abu Dhabi Bank. Now still within the region, we see Saudi trading in positive territory. That's the outlier there, 0.64%, up 12,024 points. And this was helped by 2.4% rise in aluminium products. The manufacturer Alteza Group. Now, Qatar was the downer for at intraday, 0.2% down, and it was led by a 0.3% fall in the Gulf's biggest lender, Qatar National Bank. Let's look at the US now, where stock futures were slightly higher in early trade on Tuesday after the Dow Jones Industrial Average closed at a record high. The futures tied to the Dow Jones futures, we saw it flat in early morning trade today, 0.00%. However, in positive territory, S&P 500 futures and Nasdaq futures were in positive territory, 0.13% and 0.21% each. Now, the Dow advanced to record levels in previous session. We see the S&P 500 and Nasdaq also posting gains in that session that was yesterday. Traders are betting, as I mentioned earlier, that the Federal Reserve will cut interest rates 3 times this year after Goldman Sachs Group said conditions were now ripe for easing. Now let's look at Asia and see how they performed on Tuesday. I can tell you it was mixed following a slew of political and economic news from the US. We see Japan's Nikkei 225 up 0.2%. It's at 41,000 now. Now on the cusp in South Korea, Japan's Nikkei was off. It was on holiday yesterday. It resumed however, in a positive territory. Kospi in South Korea is up 0.18%. Now we see the Hang Seng in China, down 1.6%. And this was led by consumer stocks. Insurance was also down. We see Shanghai, that's in mainland China, 0.08%. But trading in the opposite direction from the Hang Seng index, was in positive territory. And we see in Australia, we see that index down 0.23%. And that's for Australia. But looking at other markets, I can't leave without talking about Hugo Boss. That's one of the luxury brands that we have. The shares plunged 10% on Tuesday after the company cut its sales outlook, now becoming the latest high-end fashion line to warn of persistent woes in the luxury sector. Now, the German fashion house said on Monday that it expects the full year sales of up to 4.35 billion euros, down slightly from a previous forecast of up to 4.45 billion euros. Now, on Monday, we also got that report from Burberry that the shares also dropped about 11%, and this was hinged on particularly challenging markets, especially in UK and China. A lot going on for luxury brands now because not enough demand. And you think you need to rethink your buying right now. Rethink it.
No, it's already out here. You know, during our conversation with Mr. Bismarck Rouhani earlier today, when we looked closely at the inflation numbers.
Yes.
So we saw that there was increase in the price when it comes to basics, the yam, the wheat, the rice. But the proteins, like the meat and the fish, the chicken, demand has reduced.
It dropped,
so everyone is just, let's do the basics, stay alive first. And then we can think of the luxury. I mean,
meat, protein is now a luxury in Nigeria, huh?
Say?
Protein is now a luxury in Nigeria.
Unfortunately. So, and that's why we keep talking about the need for very intentional and strategic, movement. I mean,
by the Minister of Agriculture.
You have the food inflation still going up, and when you go closely and look closely into the food inflation, you see beverages. Those are major drivers, and you still have gari, yam. Those are the staple foods for Nigeria. The price is still going up.
And beans, eggs. You can't even touch the cheapest protein we used to have.
Yeah.
You can't even touch it anymore.
No, it's golden now. It's golden egg.
Golden egg.
The children eat golden
eggs.
Yeah, out of necessity. I mean, it's really not a very good one. So even though Hugo Boss and all of that are looking at they are the luxury, but it's also showing in Nigeria in its own way.
This
protein becoming a luxury
item.
It's because we need it for healthy living.
And so, like I mentioned somewhere, I said you can postpone buying luxury items, but you can't postpone eating. You can't say I will eat next month. Yeah. And you have to. You have to if you want to stay alive. You have to stay alive.
All right, we're on it. Thank you, Will. All right, now let's go to Europe now, where top EU officials say that they will boycott meetings hosted by Hungary after the country's Prime Minister, Viktor Orban, met with Russia and China. We've been talking a whole lot about the not so good relationship with China in recent times. And we saw their GDP drop to 4.7%, the lowest, I think, since the first quarter of last year. Let's talk more about this with Emily Lashner. Emily, good afternoon. So what's the reason for this boycott?
Hi, thanks for having me. Well, the EU is upset because they say they had not been informed of Orban's plans to hold meetings about Ukraine with Vladimir Putin and Xi Jinping. Orban says that he's on a peace mission that is aimed at bringing an end to the war in Ukraine. But the EU sees this as a move that really undermines EU unity and security. Orban was recently made president of the European Union, which is a rotating 6-month position, and it's expected that a coordinator, at the very least, inform members of talks of this significance. So these rogue meetings are really seen as a breach of EU treaty, and this is why the executive arm of the European Commission says it's engaging in a partial boycott of the presidency by only sending high-ranking officials to informal meetings. So this means that Commission President Ursula von der Leyen will not be present at any formal meetings hosted by Hungary. And last week, Sweden, Finland, Estonia, Latvia, and Poland, countries that are on or very close to the Russian border, also said they would not be sending their ministers to any meetings that were linked to Hungary's EU presidency in protest of Orban's talks with Putin.
Yeah, so I'm just wondering why Hungary is so interested in this relationship with Russia.
Well, Orban is pro-Russia, and he's always exhibited this adversarial posture towards the EU. He's repeatedly rejected calls from the West to sever economic ties with Moscow. Hungary is now the biggest consumer of Russian energy in the EU. He's also criticized EU sanctions on Russia. He's blocked financial assistance to Ukraine, and he's really gone against the European mainstream by also refusing to supply Kyiv with weapons so it can defend itself against Russia. Hungary has long argued for an immediate ceasefire and peace negotiations with Ukraine, but it hasn't exactly outlined what that would look like. And Orban has also delayed the ratification of Sweden's accession to NATO. So this type of behavior is not new or maybe unexpected. I mean, Orban wants to be the bridge between Russia and the West, between China and the West, but antagonizing the EU is certainly not going to place him in that position.
Yeah, obviously. Let's look at the market now. What are investors doing?
Well, today they're watching oil prices, which have slipped due to worries that a slowing Chinese economy is lessening demand. They're also turning to the U.S. since there's growing consensus that the U.S. Federal Reserve will begin to cut its interest rate again as soon as September. And they're also watching a $23 billion acquisition of a cybersecurity startup named Wiz by Google's parent company Alphabet, which is likely to go through.
All right, Emily, thank you for that update. Oh, let's come back to this continent, African continent, and talk about one very necessary one. That's pepper. This is a necessity. It's not a luxury. We've seen what has happened to the price of pepper. So while there have been alternatives to tomato, we've seen people turn to cabbage, people have turned to carrots for tomatoes. Doesn't seem there's a whole lot you can turn to as an alternative for or a substitute for pepper. And so we've seen the price soar in recent times, price inelasticity, about 50 kg of a bag of Scotch bonnet that perhaps you used to buy in bulk for the home or even for commercial purposes. We've seen what has happened to that price. Now let's discuss this now with Halima. Halima Adedinran is an analyst with Preferential Derivatives Company. Halima, I know you're going to be talking about this from first-hand experience because you and I know how important pepper is to every diet, every pot of food that we have to serve to the family.
Mm-hmm. Yeah, so we in Africa, we eat a lot of pepper, and so we cannot do without it in our food. So globally, Vietnam is the highest producer of pepper, while Nigeria is the highest producer of pepper in Africa. But recently, we've seen a volatility in the price of pepper because of the interplay of demand and supply, which is caused by various factors, which are climate change, pest invasion, logistic costs, insecurity, and many more. But in this period, especially this year, what really caused the spike that we see that is very dramatic in pepper is the weather change, which is the climatic condition. In the southern part of Nigeria, we see that there's a bit delay in rainfall. And we all know that most of the farmers in Nigeria, they rely more on rain to do their crop and harvest and all. And so irrigation is not that prominent in the country. So this caused a delay in terms of harvest and planting of pepper, which weighed on the supply that we are expected to see. Because between November and May is the off-season of pepper, while June down to October is the harvest period. And also, not only that, we see in the northern parts, there's pest invasion. It's first occurred in 2016, but at that time, we discovered that the pest is being resistant to the pesticide. But there are little that was done in that period. So we see a resurgence of that pest, which caused about 60% of the northern harvest in this period. And so this also drastically dropped the supply of pepper generally in Nigeria. And that's why we are seeing the spike. Beyond that, we see that the logistic cost too has increased over 100% in Nigeria because of the fuel price that has increased in recent time. And insecurity too. Most farmers have abandoned their farmland, while some are negotiating with bandits for harvest and cropping of their various farm produce. So these are various reasons that have caused the spike in the price of pepper in Nigeria generally. But thankfully, we are now in the harvest period. So that's why we are seeing a drop, a gradual drop in the price. And we are likely to see more because the northern harvest is coming in by August. So that's where we are for now.
Yeah, but well, that is supposed to be a relief. It's short term because that means that by this time next year, we'll be talking about, or before this time next year, we'll be talking about another hike in the price of pepper because we harvest, we waste about 50% post-harvest losses. And then in a couple of months, we're out of pepper again. And then we're back to, I don't know, prospects of, apart from scaling up production, preservation, all of this to keep them for the off-harvest season or the off-season, to stabilize prices.
So, well, that might not be in next year because of this invasion, we see that so many agri-research institutions are now going into how to curb the spread of the pest. So that could be achieved before next year. That is on the pest side. Then on the weather fluctuation, we might not see this kind of weather pattern till next year. So this could also help in bumper harvest. But apart from that, to see a commercial scale of pepper, we need more of agric extension. We can really say that agric extension in Nigeria is as good as dead. So if there is revival in that space, which helps in agri practice, the use of fertilizer, improve seedling, we could see that could help in the supply aspects. Not only that, we also see that land tenure is a big issue in terms of agreement, dispute, and all. So if this is also reduced to the minimum extent, we'll see that commercial scale of pepper would increase in Nigeria. Then we can see that partnership with agric association helps a lot when it comes to large commercial level in terms of agric practice. So if government can work hand in hand with agric association, it will help to improve their machinery and their finance. Because in 2023, I think the total credit to agric is about 24%, which is like a marginal drop to what we see in 2022. So there has not really been an improvement in terms of finance. If we are talking about large expanse of agri produce, we need more finance. So I think this put together could help to change the narrative of what we are seeing or experiencing right now.
Maybe we should do small scale too. Remember that the wife of president she has started her garden, in the villa. So perhaps we should go to our backyards and, just across the street and plant a bit of pepper. That would reduce demand for the commercial quantity that is out there.
So, well, that is a good move, and to some extent, it could push in the effect of supply shortage for household. But we are talking about commercial purpose now, and so we need more than that because we are not only the producer of pepper, highest producer of pepper in Africa. We import as well, and we export pepper because we don't have all the varieties. So we are talking about different species and variety of pepper. So in order to have them in large quantity and to be able to earn foreign earning from that, we need to go commercial. And because we are all right.
Thank you so much, Halima. So let's stick with the commercial and earn some money for the country. Thank you so much, Halima Adediro, analyst with Preferential Derivatives Company.
Thank you for having me.
As we head to Egypt now, it's good news for them. Egypt's central bank has reported that the annual core inflation is down 26.6% for June. That's the lowest since December 2022. Monthly core inflation also dropped to 1.3% in June from 1.7% in the same month last year. The CBE reports that annual urban headline inflation for June 2024 has reached 27.5%, marking the fourth consecutive month of decline from a peak of 28.1% in May, as per Central Agency for Public Mobilization and Statistics. In June, inflation was driven by food items and to a lesser extent, non-food items, benefiting from the favorable base effect of high inflation in 2023. Food inflation rose to 31.9% from 31% in May, driven by higher core food prices and a 300% hike in subsidized bread. On the other hand, non-food inflation fell to 24.5% in June from 26.2% in May. Now, the government of Zimbabwe has eased the ban on importing cars older than 10 years, but it's just for diplomats, returning residents, and inherited vehicles. Earlier this year, on the 154 of 2024, the government prohibited citizens from importing cars over 10 years old. However, that section of the regulation is allowing specific individuals to import older vehicles if they meet certain criteria. The new regulations permit entry for second-hand vehicles that are part of diseased estates and they belong to diplomats returning from abroad or are owned by returning residents. We go to Malawi, where the Green Climate Fund has approved $52.3 million project to help that country cope with climate change and enhance long-term food security. Led by the Food and Agriculture Organization of the United Nations, the Ecosystems-Based Adaptation for Resilient Watersheds and Communities in Malawi project will benefit nearly 575,000 vulnerable rural residents over the next 6 years. Approved at the GCF Board's 39th meeting in South Korea, the project aims to deliver crucial investment in adaptation and resilience for Malawi, classified by the United Nations as a least developed country. FAO Deputy Director General Maria Helena Semedo states that this project offers a comprehensive, inclusive, and innovative approach to building climate resilience in that country. Let's go to the crypto space now, see what is happening right there. We put our eyes on the board and see that Bitcoin is still in the red, but it seems to have gone back to that slow movement after the impact of the attempted assassination of Mr. Trump has waned. So we see it's still around 65, and I think it's lost some. It was higher than this a bit, but for this afternoon, 63,291.14, gaining 0.69%. Ethereum is also positive, gained more than almost a 1.5% right there. Solana, BNB, and all of that. More greens, but not as green as it was yesterday. Let's have Onua now join us to talk about that. But before we go there, let's see the headlines. So we know that yesterday, Ladi did start that conversation on the tap to earn, becoming popular now. We'll get another perspective. Pepe coins now as soar at 23%, as Nascent invests 141 billion in meme coins, and Bitcoin right there still in the news. We have Onua now. Onua, good afternoon. Could you unmute? I cannot hear you, even though I see you're talking. Can you hear me, Onua?
Yes, I can hear you. Can you hear me now?
Yeah, I can hear you now. I say it looks
Okay.
like the excitement around the attempted assassination of Mr. Donald Trump is waning off. We've seen Bitcoin has even dropped a bit, but going back to that sluggish movement trend.
Yes. This week has been a very green mood for Bitcoin right from now, breaking the last resistance from that 59,000 up to like 64,000 before a slight drop of about 63,000. Currently, it has gone up to like 2 point something percent so far, and it has been a green week generally, and we see more buy pressure for Bitcoin anytime soon.
Yeah, so top to earn, it's becoming really popular. It's in the news. It seems to be in your face now. I don't
Yes.
know. Are you also involved in it?
Yes. Actually, that is one of the reasons why we are seeing a lot of buy pressure from Bitcoin moving from that particular price to what it is right now, because on the tap to earn level is a little bit more friendly, user friendly. So most people that are seeing crypto more complicated are now able to work with tap to earn. And it's quite easy for most youth and newcomers to come into the Bitcoin, the crypto space to do the work of the tap to earn. So
Yeah.
we have a popular tap to earn like Hamster Combat, Top Swap, Tap Swap, and
But there's
Notcoin.
no assurance on no. I mean, you just do this thing. It's like a game. Is it like business? You don't
Yes,
have
it is a
anybody.
game.
It is a game. You could
It is
make
a
money
game.
and you could not.
Yes, exactly. So unlike previous games where you do a lot of things, maybe playing games, riding cars, but with this crypto tap to earn, it gives you the same value, but this time around with another token in terms of the compensation that is attached to it. So you just tap and click on each of all the screen, what's on the screen, you follow the instructions and you tap and you earn. And you can also withdraw the money into your wallet, because most of those platforms are attached to your crypto wallet, which each of your earnings that you get from there, you can now withdraw to your wallet and turn it into a more viable crypto. It's quite easy for a lot of people. So most people are coming into it for a start. For those that have some little misconception about crypto, with this now, they're seeing a headway towards it.
All right, Onua, thank you so much. Please don't break the screen of your device when you're tapping. Somebody did say that.
Nice having you.
All right, thank you. Chief Executive Officer of Phoenix Online System, for your time this afternoon.
Yeah, thank you very much.
Well, I guess innovations happen every day. You want to tap and make money, but I mean, you have to know you're doing it at your discretion. Nobody is holding you and you don't have anybody to hold. But that's it on the program. Thank you so much for being a part of Business Incorporated today. To be another one tomorrow, God's grace. Join me there, but enjoy the rest of your day. I'm Ini John McQuarrie.